Welcome to the Types of Risk video. My name is Kelly McKean, and I'm with the Community Development Unit at Alberta Culture, Multiculturalism, and Status of Women. Before we get started on the types of risks, I'd first like to mention that the goal of our board development video series is for board members of nonprofit organizations to have the basic knowledge, skills, and tools to be successful in their work. We realize that some of you are not board members, and that's fine. But we want you to be aware that the information, concepts, and ideas presented in this video are designed to be from a board member's perspective. Also, the information presented here is aimed at an introductory level, or as a refresher for current board members to ensure that they have the base level of understanding of board governance concepts and principles needed to successfully do their work. We do have other resources that we can share with you, such as our toolkit. In the description of this video, there is a link to our toolkit that provides additional resources and links that we think are helpful for you and your nonprofit organization as you tackle your governance issues. Included in this toolkit is also a copy of the slides we use in this video, as well as the videos, all of the videos in our board development video series. You can also hit the subscribe button down below and turn the notification on to subscribe to the Community Development Unit YouTube channel and get notification about our upcoming videos. The last thing I want to mention before we get going is that in this video, we are not providing advice. The information offered in this video and the related materials are not intended to constitute legal advice, the rendering of the legal concepts, consulting, or professional services of any kind. We simply want to share with you information that we think will be helpful for board members as you navigate your organization through its governance and operations. So, without further ado, let's get going. By the end of this video, you should be able to explain what risk is and explain the different types of risk that nonprofits may face. There are different definitions of risk in the literature, but they generally come from two main perspectives. The first perspective is that risk is a threat that could harm or prevent an organization from achieving its objectives. The other perspective sees risk as including opportunities. Both perspectives are valid, but for the purpose of this video, risk is viewed as a threat or barrier to your organization's mission. So how do we define risk? Let's look at Imagine Canada's definition. Risk is the possibility that something bad or negative happens. This could include harm, injury, or abuse to your organization's clients, staff, volunteers, funders, supporters, and other stakeholders, including board members, property, or reputation. For the organization to be successful, board members and staff need to understand the types of risk the organization may face. When thinking about types of risk, most people immediately think of physical and financial risks, and they'd be correct. They are two common types of risks that we may face in our personal or professional lives. However, there are many other types of risks that nonprofits may face. In this video, we're going to go into detail about some of the most important types of risks nonprofits can face. The first type of risk that a nonprofit organization may face is compliance risk. There are a number of external laws, such as legislation. So, for example, the Alberta Societies Act, which was approved and enacted by the Alberta legislature, and its accompanying regulations. So that's the legislation and regulations. But there are also internal rules that a nonprofit creates itself, such as objects, bylaws, policies, and procedures that organizations must also follow. If nonprofits don't follow these laws and rules, both external and internal, they might have to pay fines and/or face other types of penalties. Therefore, compliance risk is about facing potential risk of penalties or other negative consequences if your organization doesn't follow the law. An example of compliance risk can be a nonprofit organization that doesn't submit its audited financial statements to the Alberta Corporate Registry for 3 years in a row and is then struck from the registry and loses its status as an Alberta society. As a result, the nonprofit may no longer be eligible to apply for many sorts of funding and grants that incorporated nonprofits are eligible for. Financial risk is the risk of financial loss by the organization. Financial risks may happen through fraud, financial failure, like bankruptcy, or even sometimes through decisions that were based on inaccurate information. One of the fundamental roles of board members is to conserve the resources of the organization. By this I mean protecting the assets of the nonprofit and overseeing its financial affairs. As board members, we have a duty to understand the organization's finances and to be involved in its financial management. An example of financial risk could be an organization that spends a lot of money to organize and host a fancy fundraising event with the goal of raising as much money as possible. But if the event ends up not being as successful as expected or hoped for, other members of the organization, funders, and other stakeholders may see the high cost it took to run the event as an example of overspending and potential mismanagement of the organization's funds. So this is one example of what a financial risk could look like. The next risk that a nonprofit might face is external risk. This is the risk of becoming irrelevant and losing the support of the nonprofit stakeholders, funders, general public, etc. It is the risk of not responding to economic, demographic, or other changes in the community and the wider environment. Strong organizations regularly do environmental scanning, sometimes referred to as e-scanning. In the e-scanning process, board members discuss the internal and external environment of their organization in order to understand trends and other new issues appearing on the horizon and how they may affect their organization. Now, environmental scanning doesn't need to be complicated. It can be as easy as reflecting on how current trends are affecting your nonprofit's work. For example, are your funders changing their criteria for their grant programs? What's happening in the local political environment that may affect your stakeholders or your organization? How can technology affect your current work? When you reflect on these types of questions, you also need to think about how these changes and trends may affect your organization, its operation, and the different options that are available to you. An example of external risk is an organization that does good work but doesn't have a strong online presence. For example, without a strong online presence, the nonprofit may lose some of its clients who find it easier to deal with other organizations that are offering services online. By not developing a strong online presence in order to better meet the needs of its clients and members, the original nonprofit may potentially lose its ongoing relevance to its members, clients, and stakeholders. Governance risk is another risk that nonprofits may face. As you know, governance is the overall processes and structures that are used in directing and managing the activities of your organization. In other words, governance describes how you organize yourselves to fulfill your purpose, achieve your mission, and get the nonprofit's work done. As a board, you exercise your authority and control within the framework of rules, relationships, systems, and processes of your organization. And as a board, your primary focus is effective governance for your nonprofit. So you should make sure that your organization has effective systems, processes, and frameworks in place that allow your board to exercise effective oversight of the organization. If you don't, then you have governance risk, which can lead to ineffective oversight or poor decision-making within the organization. An example of governance risk could be a nonprofit that is organizing a fundraising event and decides to hire a catering company that is owned by one of the board members because, well, it's the easiest and most convenient option available. Now, we know this is a risk because it is also a conflict of interest. And the board is making a poor decision in managing the activities of the organization in this instance. And as I said, poor decision making is a governance risk. In this case, the board must identify and effectively deal with this conflict of interest. Otherwise, it could risk losing the trust of its stakeholders and community. The next is strategic risk, which is the risk you have associated with inappropriate or unrealistic programs and initiatives, as well as failure to keep the organization strong and relevant. For example, it's the role of the board to steward the organization and to direct it so that it can fulfill its mission and purpose. A strategic risk is when boards make poor organizational decisions or when they don't execute their decisions properly and or don't allocate resources adequately, or fail to respond to important changes in their environment that affect the organization. An example of a strategic risk is an organization that develops a fundraising event but doesn't have enough volunteers available to run it, but still decides to go ahead anyway, books a large venue and sets high-priced tickets. This represents a strategic risk because the organization doesn't have the necessary human resources available to effectively manage the event. If the event doesn't go well, which it likely won't because it's under-resourced, the reputation of the organization could be jeopardized. The next one is operational or program risk. Many organizations set day-to-day operations to run their programs, and things can sometimes go wrong. Operational or program risks is the risk of poor service delivery, some of the day-to-day crises that may pop up, or the possible misuse of staff, volunteers, or other resources. For example, an educational nonprofit that always schedules the minimum number of staff when it offers classes in the winter, this could represent an operational or program risk. Because if the staff aren't able to clear ice and snow from the pathways properly at the facility and where those classes are being held, and if something then happens, for example, one of the participants slips and breaks an ankle, the staff can't both run the class and help the injured participant at the same time. Next risk category is information technology or IT risk. Many nonprofits these days use information technology to support their work. For example, they may use online banking or store client and donor information on computer databases, on hard drives, or on their computer servers. Information technology risk is the risk that the technology that the nonprofit is using may not provide dependable service and/or accurate and secure information that is accessible when needed. An example of IT risk could be when an organization stores client information on an online computer database. These files will likely contain some confidential information, and as such, there is an IT risk. There is a risk that the information could be stolen, go missing, or be hacked. And the last major category of risk is reputation. Reputation risk is the risk of losing goodwill and status in the community, which can negatively impact the ability of a nonprofit to effectively raise funds, recruit new volunteers and members. And it can happen in many ways. It can happen directly as the result of the actions of the organization itself, but it can also happen indirectly as a result of the words or actions of a board member or an employee. Your stakeholders and the larger community can also build or break your reputation by what they say about your organization, how they perceive the people that are involved in your organization, and how they think your actions and purpose align. If you do not properly prevent or manage reputation risks, you may have a hard time raising money and finding future employees and volunteers. On the other hand, a positive experience with your organization can provide a number of opportunities to support your purpose. Funders and donors will be more willing to fund your work, and you can find staff and volunteers that are more engaged. An example of reputation risk could be an employee who doesn't agree with the program the nonprofit is running, or a decision that was made by management or the board. And instead of discussing it with the nonprofit's executive director or board, the staff person decides to use their personal social media account to complain about it there. This represents a reputational risk. Although it may be the staff person's personal account, what they say or do on social media can also potentially affect and jeopardize the reputation of the organization that they work for. So these are the major areas of risk that we wanted to identify. However, before we go any further, I just want to mention that what we've just covered is not an exhaustive list of the categories of risks that nonprofits may face, but they are some of the most common. We encourage you to consider any other areas of risk that may be specific to your own organizations. I'd also like to mention two other important points. Now, you may look at these risks and the examples that we just covered and think that one or two of these examples could also represent another type of risk, and you would be absolutely correct. These risks that we talked about are not mutually exclusive, and a program may have one or two or all of these risks associated with it. For example, if you have a financial risk or an IT risk, there is also usually a reputation risk. It might be that one of these risks is more prominent, but it does not exclude other types of risks. So when thinking about risks of your programs, you must consider several aspects and make sure that you consider all types of risks that could be involved in your work. The second thing I'd like to mention is that many of the videos in our board development series are on governance topics that are directly related to the risks that we just covered. The content in these additional governance videos may also help you to develop strategies on how to mitigate or reduce the areas of risks that we just covered. We encourage you to watch these additional videos and to let your fellow board members know about them as well. So now we have a scenario to share with you. I'll read through the scenario first and then discuss some of the type of risks that may be involved. Hospital Builders International, or HBI, has been in operation for over 20 years. The organization's founders are no longer on the board, but they act as special advisors to the current board. They have strong influence at HBI, but many feel that some of their founders' ideas are no longer relevant to the way the organization currently runs its operations. They proposed starting a program that was successful 20 years ago. Now imagine you are a board member and feel that this program being proposed is no longer relevant to the work that you do. So what are the immediate or obvious types of risks associated with this scenario? Let's look at this. Should also mention that with any scenario, there can be multiple risks. And in this scenario, HBI scenario, let's look at 3 obvious ones. Regarding external risk, although the board respects the founders, there are some doubts that the program the founders are suggesting may not be able to properly respond to current societal trends that were identified during the current board's environmental scan. If HBR starts this program, the organization may risk losing the support of its members, stakeholders, and the wider community, along with its funding, because the direction may not align with what is currently happening in the community. The next potential risk is the strategic risks associated with running an old program. Although the program worked well 20 years ago, considering HBI's current strategic priorities and resources, it may not be realistic or relevant now, 20 years later. And the last area of risks is the operational or program risk. Operating this proposed program would mean diverting staff from other areas of the organization in order to run it, which would mean taking staff and resources away from other important areas of the organization. Now, I'd just like to acknowledge that this is not an exhaustive list of risks that could arise from this scenario. And you may have some other answers that could be different from those that I chose for this activity. And you may be 100% right. It all depends on the context of the work and your experience and familiarity with the type of work. You may have chosen a different type of risk, and you may have a very good argument for it. Also, I didn't talk about more than 3 types of risks. But this is not because I thought there were no other types of risk associated with the scenario. For example, you may think that there is a financial risk in this scenario, and you'd be absolutely right. I just didn't think that financial risk is the most immediate type of risk in this scenario. So if your answers are different, don't be worried. You might just have a different interpretation of the situation than I have. Now let's do another scenario. Again, I'll read it and then discuss the types of risks in the scenario. The Anytown Recreation Center, or ARC, receives money from a national funder that supports soccer in rural communities. The funding is to enhance soccer in small communities through field maintenance. ARC receives a yearly grant of $2,000 from this funder. This year, the ARC playground also needs repairs. After discussion, the board agrees to use the soccer funding to repair the playground. The board justifies this decision by noting the playground is right beside the soccer field. So in this scenario, what are the 3 most immediate types of risk? Let's discuss that. I think the most immediate risks associated with running this program are compliance risk, financial risk, and reputation risk. I think compliance risk is one of the most immediate ones because compliance is always a risk when the organization decides to use funding outside of its original purpose. Funders often have specific and strict uses for their funds. In this scenario, the ARC organization may face consequences if it doesn't use the funds appropriately, and it may become liable. Reputation risk is also involved because the relationship between ARC and the funder could be damaged. The funder trusts that ARC uses its funds for the specific purpose that they have identified. If that trust is broken, ARC may not be able to get money from this funder in the future, or others who may hear about the situation. The third most immediate risk is a financial risk. If the organization uses the funds for a different purpose, they have the risk that the funder may withdraw the funds that they gave ARC for its soccer field maintenance. Since ARC has already spent this money on the playground, the organization may have to find another $2,000 to pay back the funder. And this is a significant financial risk. Some of the other important risks that are less immediate in this scenario are operational and governance risks. But as I said, remember that you may have chosen different answers and you may be completely right about them. Okay, folks, that's it on the types of risk. Our contact information is on the slide and that's in the toolkit as well. If you're located in Alberta and you have a question or need further information or would like to request our services, you can contact us through email and by telephone. You can also access our website to know more about our resources and services. And also, if you want to be informed of our future services and resources, you could add your email address to our subscription form, and then you'll receive information about our services and resources as they become available. The link to the subscription form is in the description of the video as well. Thank you for your attention. Take care, and always remember that our communities have so much more because of everything you do. Thank you for now, and bye-bye.